looking at the Dow, we have slipped away further from that 20,000 mark. Pressure from real estate, technology stocks hitting the markets today. We remain shy at the history-making level, at least for now. But investors should be watching a few things and focusing on 2017 overall. So I want to bring in James Investment Research President and CIO Barry James and JMP Securities President Mark Lehmann. And gentlemen, all right, so the confetti is ready around here, but it might just be used for New Year's Eve, frankly, if we don't get this 20,000 number. But Barry, you know, the second highest level on the Dow was yesterday. There seems to be a real resistance here to hit that level. What is behind this?
I think it's just been the strong run we've had. You know, the S&P's up about 9% from the election time, and it's only natural for the market to have a little bit of a pullback. Also, a lot of folks are trying to take whatever losses they can this year because they may not be worth as much next year with tax cuts. I think that we're in a hope rally. It's strong. These tend to happen after elections. Going back to 1952, you get strong rallies up through about the end of January. So we're just in this, and then you tend to get a bit of a settling after that. I'm not really worried about this level. I remember back in 1980, we said Dow 3,000 when it was at 800, and people thought we were crazy. We're going to hit 20,000, but it's probably going to slow down, especially for large stocks. We think small stocks are actually going to be a better place to be.
Yeah, we've only got 2 more trading sessions after today, and then it's the 2017 mark. You know, one of the things that we've seen, especially in November, we saw this huge influx into stock funds. Investors moving out of bond funds, going into stock funds, the average American. We finally see that momentum. Is that the turning point for you, the big rotation out of bonds into stocks?
I think it's one of the themes we saw after the election, and I think it's going to continue through 17. People are just underexposed to cash equities, and they have been for some time now. I think there's been reason for that. I think through the crisis of 08 and recently, I think people just were spooked by the overall market, and I think there is a reason for them to look at it in a fresh perspective, and I think that can be very, very powerful for the average investor and overall for the market through 2017.
Barry, there's some, naysayers that say that this rally, this market has been riding on the Trump train, and that it's too early to tell what the president-elect is going to be able to actually do once he gets into office. He's got a lot to figure out. Do you think that is a risk in the first quarter for stocks?
It's a real big risk, as we've already seen with, like Lockheed and Boeing. When he talks, those stocks move. So that is something. But we try to look beyond just the person in office and try to look at risk. We look at monetary risk, economic risk, sentiment risk. They're all pretty stable right now. The only area we see higher risk is in valuations, and so that's going to be the one thing that's going to add volatility, along with anything that would come out of Washington that isn't expected. Could definitely cause prices to move quite rapidly.
Mark, a lot of overall talk about the economy as well, and if the economy can grow 3-4%, as Steve Mnuchin, the Treasury Secretary appointee from Donald Trump, has said repeatedly on the Fox Business Network that he wants to, that's his top priority. If we get that, where could the market go for 2017 for the one-year period? Because a lot of our viewers are looking long-term. They're not looking to tomorrow. They're looking to the end of next year.
Yeah, I mean, that's a high bar, and I think all eyes are focused on that. I think you're going to have the administration as well as Congress really focused on a pro-growth agenda, and obviously we've talked about that before. If you start to see visibility that we're seeing an acceleration in the economy, I think then you're going to probably see an acceleration in the kind of investment in the markets that we just talked about. You could see the market up 15 to 20% in 2017. I think that will be a combination of acceleration of growth and acceleration of hope, and those two things will be very powerful. You're setting yourselves up for a lot of expectations, but the combination of what I described could lead towards a terrific 2017.
I'm ready for more surprises, because Lord knows that 2016 was a big surprise. I mean, we just covered one of the craziest elections I think any of us have ever seen, frankly. Barry James, Mark Lehmann. Real quick, Barry, I know you got a couple of names. Throw them out there before we let you guys go. Barry?
Oh, I'm sorry. Yes, I would like a couple small stocks in bargain areas, telecoms and discretionaries, Vonage, Big Lots, and Aaron's. All small. We think small is the way to be for the next 3 years. You want to be overweighted in small cap stocks and bargain securities. They've been lagging most of 2016, and they're the place to go.
There you go. Barry James, Mark Lehmann, keeping it positive. We like it. Guys, thank you very much. Appreciate you being here with me.